Hey, I'm Nash Evans, CEO of Evans Energy 2. I'm here today with oilcashflow.com with a new fund that we've created. It's called the Sandy B Pistol Multi-Well Joint Venture. We created this fund as a way for partners to come in, get involved in a very diversified oil and gas portfolio that focuses on long-term income, monthly income, and the potential to write off 100% of this investment in the year of 2022. So when you scroll down on oilcashflow.com, you'll see where it says click to view project. Just click there and you can refer back to this video as you're going through it on your own. We just wanted to come up with a way that was convenient for our partners and prospective partners to really look at these deals on their own accord. But click on the deal. Look at the bottom right of the pages. Go to page 4. Page 4 is the 4 wells we have here. So you're looking at 4 different wells, 2 of which are gas, 2 of which are oil. These 4 wells range anywhere from 10,629 foot all the way to 16,101. One of the biggest things here is the quality of the wellbore itself. We've got the production, we know what's there, we know the logged uphole potential. These wells were drilled, one by us, one by Exxon, one by Sampson Resources, they were a $4 billion company, and one by Tomlinson Interest. So if we will move on to page 5, I'll get into the numbers and then I'll back it up by actually walking you through the wells. These 4 wells and their primary targets that we will either be completing or they're already completed and producing should generate anywhere from a 30 to a 50% rate of return a year. And I know that sounds very high, but I've got to explain that. This oil environment today, as we're doing this, it's $104 a barrel. Natural gas is anywhere between $7 and $8. This is not a very normal circumstance. But if a well doesn't make sense at $40 oil and $2 gas, then it should make sense today. These 4 wells all stand on their own accord, and given this production rate and production prices that we have in this environment, you should get a very fast rate of return on your capital, be able to write off 100%, and then have a project that cash flows for 20 to 40 years. Just to let you know, we are only selling 25% working interest in these 4 wells. 1 unit is $110,000, and that gets you 1% in the 2 gas wells, 1% in the 2 oil wells. So you are purchasing for $110,000, 1% working interest in 4 wells for a total of 4% working interest. $110 oil, $6 natural gas. Today, gas is closer to 7 and 8. Oil is 100 to 110. You should be generating about $3,000 a month in income on a $110,000 investment. So if you look at that, you're going to end up generating about $36,000 a year. One of the greatest parts about this, I've done some other videos on tax benefits, how you can get to a 2-year rate of return. So if you invested $110,000 and you're able to take the tax benefits, it should save you about $40,000. So after tax benefits, you were looking at a cost basis of $70,000. $70,000, $36,000 a year in income times 2, you have made your money back. But again, don't forget, oil cash flow is focused on that. That monthly income, month in, month out, low dollar oil, high dollar oil, low gas, high gas. And page 5 breaks it down. Now, just remember these numbers here and the projected anything could change. You know, this is oil and gas. It is risky by nature. Tax benefits are tremendous, but we do this for income. Run your own scenarios. We invented oilandgascalculator.com. Come up with your own estimates, but the numbers here on page 5 have all taxes, all expenses, everything fully deducted. So if our production comes middle of the road, this is a very sufficient number to reach. Page 6 breaks down all the numbers to a T minus expenses. Page 7 is the work that it's going to perform, but when we put this together, we wanted to make sure this is a fund that can hold up long term. And when you get into page 8, here through the rest of the book, you're going to see the background information on each one of these 4 wells. And let's talk about risk. And let's go to page 8. So if you're looking at the Jolie Road well, it's a 10,600 foot well. We drilled it in 97 and already produced 1 BCF from one zone. This well has 16 uphole zones. Now, these 16 uphole zones will produce anywhere from 100 MCF a day to 3,000 MCF a day, but you've got options. We're estimating that this well should come in around 1,000 MCF a day from the zone that we're about to recomplete. But if you will turn the page to page 9, you will see all the uphole potential. So we wanted to be fully transparent, because if our first objective that we look to complete doesn't work, you've got backup after backup after backup. And you know, that's why my dad's been in the business for 40 years and we've drilled over 650 wells. Our objective through every market is to make sure that our partners are making money and that we're making money. So as prices drop, we will recomplete, change zones, and all of that. And we wanted to show you that we have the capabilities of doing it here as well. Page 10, we went and highlighted all the exact same zones that you'll see. So you actually have the log and the breakdown of the formations. And then go to page 13. It's the Burke's Energy well, 12,300 foot well. It was drilled by Tomlinson. It's an oil well. We're not expecting much, but in this environment, 20 to 30 barrels a day can still get you a great rate of return if it's purchased properly. It is part of the same acreage that the Jolie Road is held, so it's only right to include both wells in the same acreage hold there, and they both should generate you a good monthly income. And you will see on page 14 as well the additional uphole zones. Then we'll take it to page 17, the Sandy Hook unit 2810. This was an oil well. We fully anticipated doing anywhere from 30 to 50 barrels a day in oil. And we do have the zone logged here as well. This one was drilled by Exxon. One of the key things is, just like real estate, you've got to focus on a solid foundation. Each one of these 4 wells has that. They're drilled by billion-dollar companies or very quality oil and gas companies, so the integrity is there so it can maintain production for a 30 to a 40-year window. Page 18 will show you the uphole potential in that as well. Page 21, the Sandy Hook gas unit 13.8. This one was one we acquired from Sampson Resources. This is a gas well. Should come in, I would say, about 600 MCF a day. Could be a little higher, could be a little lower. It does have additional reserves in it as well. All these wells, the key thing is, in this environment, everybody that is putting a new deal together has to get a drilling rig. They've got to get permits, they got to get right-of-ways, gas and oil contracts, production equipment and facilities. This project has it all. We already know it's here production-wise. 2 out of the 4 wells are producing today. One of them does need to be reworked with some new tubular goods, but you should be receiving an income out of the chute in this project here. But it's focused on that person that is looking for a tax benefit and converting that tax liability into monthly income with the sustainability to produce for 30 to 40 years. We would love to talk with you more about this project. Give us a call at Evans Energy 2 and we can walk you through it all. Hope this presentation helps and at least get you started on the right spot, and we look forward to hearing from you. Give us a call here at Evans Energy if you have any questions, and we would be more than happy to answer them for you. Thanks for watching.